Good evening, students. Thank you so much for joining the class tonight. Um, I hope you guys are well. Okay. So for those of you guys that still don't know me, my name is Millicent, and I think I'm gonna keep on introducing myself till I'm quite certain that you guys already know me, right? So, this week we're still doing that, right? So on Monday we did VAT. We did the slides that were based on VAT, right? So now I sent a question in the group chat, just like a homework, to help you guys maybe sorry, to help you guys maybe understand the theory that we've done in VAT, right? So today on our Wednesday class, that's the class we're gonna like revise the homework that I sent in the group chat, just to cement your knowledge when it comes to VAT, right? So just to like give you guys a recap, right? We're still on VAT, and we say that VAT is like a type of tax that is taxed on the supply of goods and services by a VAT vendor, right? So we also have VAT inputs and VAT outputs, right? The most important thing to take note on the two subjects is to look at the flow of goods or services, right? So if your goods or services are going out, that's your VAT output, and then if your goods or services are going in, that's your VAT input, right? So I'm just gonna like do a summary of what we did on Monday before we like do the question, just to get you guys excited for the question, or maybe to give you guys a recap just in case if you've forgotten what we did on Monday. Okay, so we also discussed that for you to be able to register as a VAT vendor, you must register as a VAT vendor if your taxable supplies are more than a million rand for the period of 12 months that follows, and you may register as a VAT vendor if your taxable supplies are more than 50,000. So the first one, it's mandatory, and then the second one is by choice, right? You're not actually obliged. So when it comes to calculating that, the concept is pretty simple, because you just say that output VAT minus input VAT to get yourself the VAT that is payable or due to SARS, right? So the other thing that you have to take note of is whether or not the amounts that you have in the transactions are inclusive or exclusive of VAT, because if the amounts are exclusive of VAT, it means you're gonna calculate your VAT using 15%. But if your amounts are inclusive of VAT, it means you're gonna use the tax fraction, which is 15 over 115, right? Another important aspect that we touched on is the tax periods, right? So we say that we have the category A, B, C, D, E. Those are the tax periods we have. And the reason why these are important is not because they're going to ask you to list the tax periods, but they're going to include them in your transaction. And it's up to you to know that category A has 2 months, category B has 2 months, category C has a 1 month, and category D has 6 months, and category E has 12 months. So it's up to you to know which category has how many months, so that you can be able to apportion or allocate your VAT to a specific period that you would have been given. Okay, so another thing that we touched on, and this thing, if you have it by your UJ slides, I want you guys to like open it and put it on the side, because we're gonna use it when we're doing the question, right? So if you remember, there is a table that was in our slides on Monday, the one that showed the standard rated supplies, the zero rated supplies, and the exempt supplies. It had the list of the supplies that was available. Okay, so I would like you guys to like open that table and put it close to you, so that when you're doing the question, you are able to allocate the zero rated supply, exempt supply, and the standard rated supplies. Obviously, you won't have this table in the exam, but now just for revision purposes, I would love for you guys to have it on the side so that you can just get used to studying it, right? So we also touched on special VAT situations, right? And we said that if your transaction include a motor car entertainment or fees and subscriptions, right, you won't calculate VAT on that, reason being that the input VAT is denied, right? There is no input that is claimed when you purchase a motor car, when you acquire entertainment, or when you pay for fees and subscriptions, right? So reason being, you're not gonna be able to calculate VAT. So the reason for you not being able to calculate VAT is the input VAT is denied, because those products and services, those goods and services, they don't include input VAT when you acquire them, right? So even if when you're selling a motor car or when you're giving away entertainment, right, you won't be able to charge output VAT because initially input VAT was denied, right? So I hope this can be a very good recap audio. I couldn't like put up the slides again because I didn't want to make you feel like we're redoing the slides again, right? So that is why I just like did it through an audio like this. So now I'm gonna share my screen to the question that I shared in the group chat, right? Obviously, I'm gonna read the question with you, and please close your eyes because this is the solution. I don't know why it's taking long, but please, guys, close your eyes so that you won't see the solution. I will let you know when to open them because now um it's taking time to switch to the homework, right? Oh yeah, now you can open your eyes. So we're gonna read the question together, and I'm gonna explain to you step by step on how you are supposed to go about this question, right? So the question reads, right, reads, assist hair extraordinary with their VAT calculation or VAT period ended 31 Jan 2020. Where there is no VAT effect, you need to provide a correct reason, right? So, guys, this is very important. Like, I cannot say this enough, but it's so important that whenever there is no effect, right, on VAT, right, you have to provide the correct reason why you think that there is no VAT, right? So this statement here that you see, even if they don't even if they don't write it in an assessment, right, but it's a common rule, it's an unsaid rule, I don't know what they call it, but sort of like an unsaid rule where everybody just knows that even if they don't tell you that give a reason, you are supposed to give a reason. Because in text, one thing that I'm going to say now and I'm going to keep on saying for the rest of the year, they don't mark you for saying no VAT then zero, then the value you give is a zero, right? They mark you for the reason that you would have given behind the zero that you would have written, right? So you only being able to know that, oh, here there is no VAT is not a valid reason enough for you to get marks. You only get marks when you know the reason why there is no VAT. Okay, so now moving on to the question, right? It says Hair Pty Limited is a company that sells hair products for all hair types, right? The company is a category A vet vendor. You see what I was saying in relation to the categories, right? You have to know that the category A is the one that's gonna it's the one that includes it's the one that only has 2 months, because if you didn't know that, now you wouldn't be able to know how or when to make use of this, right? And sometimes you won't even have to make use of the category, the fact that they are a category A VAT vendor, right? But it's just important for you to be able to identify that information just in case in your transaction, if you're required to make use of the apportionment or allocation to the 2-month period. I hope that makes sense. Hair X manufactures different types of shampoos. Uh, Hair X manufactures different types of shampoo, oils, and conditioner. During December 2019 and January 2019, they acquired the following expenditure, right? So here they've already told you that the transactions that are below, they only occurred in December and January 2019, right? And if you remember, guys, in the class that we did on Monday, I say that a category A VAT vendor has a January month end, right? And since it's a 2-month period, right, it means that it's gonna start from December to January, and then it's gonna start from Feb to March up until the end of the year of assessment, right? So the transactions that follow, they only occurred in December and January, right? And I also gave you a hint that for you to be able to know which month, the difference between category A and category B, the months that they end in. Category A has an A, so the A in the January is gonna be your hints, and then category B has a B, and then the February in the month of Feb, and the B in the month of Feb is gonna be your hint for category B, right? It's just something that my lecturer told me when I was in second year, and it really helped me because now I know how to I'm able to differentiate the two, right? So HairX only purchases goods from registered vet vendors, so meaning to say they are able to charge and claim VAT since they only purchase goods from registered vet vendor, unless there are extraordinary circumstances. And honestly saying, if there are any extraordinary circumstances, they would let you know, right? So during December and January, right, already this information here is telling you that you don't have to apportion, right? It's only going to be for the December and Jan period, right? You don't have to apportion because whatever that is going to follow is already apportioned to the December and January period, right? Just like what they said in the beginning of the scenario, that the following transactions are for December and January, so there is no need for you to apportion unless maybe if they specifically tell you that you need to apportion, right? Or if they tell you that the following expense or transaction was for the whole 2020 year of assessment, right? So during December 2020, HairX sold shampoo, conditioner, and oil to their various clients in South Africa, Botswana, and Namibia. The total sales amounts in the trial balance is 350, right? So this is the total amount, right? And then, as you can see, guys, right, these total sales are for the clients that are in South Africa, Botswana, Namibia, and Lesotho, right? I think we can all agree that South Africa, right? That's the country that we're in, right? So that's the only country that we're able to make local sales in. When we make sales to Botswana, Namibia, and Lesotho, right, we're making sales outside South Africa, meaning to say the sales now are exports outside of South Africa, right? And it has an impact on our VAT because during the class we say that the local sales, the export sales, right, for the sales that are okay, let me rephrase that, right? When we make sales outside South Africa, they are called export sales, right? And we said if you take a look on the table that I asked you guys to open, right, the one that has a list of all export and exempt supplies, right, on the zero rated supplies, the list that has the zero rated supplies and the exempt supplies. On the zero rated supplies, the first line that you see, it it clearly says that export sales, right, they are zero rated, right? It says that the zero rated supplies, the first thing on the list is export goods, right? So it means that on the goods that we exported outside of South Africa, we are not able to charge VAT, right, on the sales, because those goods, they are zero rated, right? So it says here 100,000 of the sales amount, right, were from the direct exports to the neighboring countries, right? Meaning to say, from the 350,000, right, 100,000 of the sales amount is a direct export to the neighboring countries, right? So here, what you do is you would have to say, let me switch on. You would have to say 350,000. I hope you guys can see the solution. Okay. 350,000 minus 100,000, right? That is the exports that are zero rated, multiplied by 15%, right? To get yourself the VAT output. Because remember, this is a sell, right? The flow of goods is going outwards. So meaning to say we're going to have to charge VAT outputs. And then VAT outputs here is your positive charges, right? So please guys, take a very good look at this table. Don't focus on the content inside the table, but focus on how the table is structured, right? This is exactly how you're supposed to structure your answers in the exam, right? What do I mean by that? I don't mean that you have to draft exactly this table, right? But the structure of how the table is drawn is how you're supposed to structure your answers. Meaning to say, you have to write an item name, you have to leave a space for your calculation and your reason, you have to have two columns for your inputs and your output, right? If you're not comfortable with the two columns, right, at least when you have one column, you have to state that the first the first transactions relate to VAT outputs and the second transactions relate to VAT inputs in your one column, right? And if you're not comfortable writing the inputs and the output, the least that you can do is to show by the signs, because I said the positive signs stands for the VAT outputs and the negative signs stands for your VAT inputs, because the output is going to be deducting the inputs, right? So that guys, it is very very important in your assessments. You might get your calculations right and your reasoning right, but if you don't specify that this is my output, this is my input, the examiner will not know what exactly you're doing. They won't even identify for you which one is the input, which one is the output, and you will lose your marks for not being able to clarify that, even though the calculations were correct, right? So it is very important for you to structure your tables or your calculations very nicely, right? If you don't like this table, at least clarify in the assessment that this is my inputs, this is my outputs, so that you can get your full marks, so that the markers are able to know that you know what you're doing, right? So moving on, right? Here, so here the calculations for the cell in South Africa, the local cell, we have removed the 100,000, and then now we're left with 250. So we basically say 250 for the local cell, multiplied by 15%, right, to get yourself the 37,500 that was in the table, right? And you have to let the markers know that you didn't use the 100,000 because you know that it is a zero rated supply, right? So if you don't write that, if you don't write that exports to, what is it, you can say maybe for, what is it, you can maybe say foreign sales or export sales, right? The first one you can say local sales, the second one you can say export sales, right? And then you calculate on the column that you're supposed to give your calculation or your reason, you say zero rated supply, your reason being export sales, and then on your amounts you give a zero amount, right? So that is why I was saying to you guys, you are not allowed to just write a zero. You see what they did here, and I think I made a mistake here. The zero here is supposed to be here by the output side, right? The sales, international sales, direct exports, zero rated. The zero, this one is supposed to be by the output side, right? So you see here, I gave you guys a zero, right? But I I also gave you guys the reason why I say it's a zero, right? The reason was that it's a direct export, and then direct exports, they are zero rated, right? So you writing zero rated alone is not enough reason, because they are, when you look at the zero rated list, it has a lot of things, right? Now it's up to you to know it's zero rated because it's an export service. It's zero rated because it's uh it's a municipal rate, for example, and it's zero rated because maybe it's an international travel, right? It's up to you to know everything, right? So if you don't know, it's fine, you can write, right? But then for you to get the full marks, it's best that you know the reason behind the zero rated. I hope that makes sense. Okay, so they purchase ingredients. Now we're doing the second transaction. They purchase the ingredients, right, used in the manufacturing of the product in on 3 Jan, right, 2020, from organic products. The amount per invoice was 198. But due to the bulk purchase um, by HairX qualified for discount, so they only had to pay 178,250, right? So the amount that you have to use now, you have to use 178,250, because you're taking into consideration the discount that you have been given, right? So here for the purchases, we can all agree that when you're purchasing, you're taking goods inside your business, right? So when you're getting goods inside your business, you're going to have to claim that input, right? So now you'd have to say 178 multiplied by 15%, right? The next transaction says they paid municipal rates. They paid municipal rates, right, that amount to 17,250. Right, and municipal rates, guys, they are a zero rated transaction according to the list, right? You, at this point, you don't have to ask me, Cody, why are the municipal rates zero, right? You have to be comfortable with the list, right? Because everything that I'm saying right now, I'm taking it from the list, right? Even the direct exports, the zero rated, I took it from the list. The municipal rates, the zero rated, I took it from the list, right? Here you can also write, just for completeness sake, that the municipal rates is zero rated, reason being their municipal rates, right? And then you write your zero. If you just write a zero without giving the reason on the column that you're supposed to put your calculation, you won't get your full marks, right? So going back, right, now we are going to transaction 4, right? Transaction 4 says HairX Product Development Department, which consists of 10 members. HairX Product Development Department, which consists of 10 members, traveled to India on 15 Jan 2020 to test a range of oils made from indigenous plants that could possibly enhance their own oil product. They traveled to India with connecting flight that departed from Tambo International Airport and landed in Cape Town International Airport. Right. They connected from Cape Town International Airport to the flight that landed in India. Right. The total price paid by HairX individual for the flight was 18,000 rand. Right. So this is the amount that we're gonna have to make use of. The flight to Cape Town and the flight to India was part of a package provided by the same supplier, who was contractually liable for the local and international leg of the flights, right? So this is an international flight, right? Everything that I've been reading here, right, it all points out to the fact that it is an international flight, right? It is an international flight, right? And even the fact that uh they went from, where did they come from? They went from they went to Cape Town first, and then they also went to they went to Cape Town, and then now from Cape Town they went to India, right? It doesn't affect the pet, it doesn't discourage the fact that this is an international flight and it's supposed to there is no VAT on the calculation of international flights, right? But you don't have to say that there is no VAT, because that is wrong, right? There is VAT, but it's zero rated. I just say that there is no VAT as a way of me explaining to you what is happening, right? But the bottom line is that VAT is there, but it's zero. It's at 0%, right? So you would put a zero in your VAT column, right? But for your calculation and your reason, you would have to tell them that it's zero rated. Reason being, it's international flight, right? And now you would have to take a look at your table. You would have to look at a table, right? And then you can see that I think it's number 2, 4, 6, 7. I think it's number 7 that say is international transport and insurance of passengers or goods, right? So these were passengers, so they need the 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 supply as a zero rated. Okay. Let me just check if I want to say anything else on this point. Okay, it's fine, right? I don't have anything more to say. Let's just move on. Okay, so it says Hair X received a bank statement which reflects bank charges and interest on loans. Interest on loan of 35,000, right? One thing that I just have to make clarity on here is that there is a difference between bank charges and interest on loan, right? The difference is that interest on loan is a financial service, right? And then a bank charge, it's um okay, interest on loan, right? It falls, or it's classified as a financial service, right? And then bank charges, they are not a financial service, right? It's just an expense that you have to pay, maybe for an overdraft or whatever issue that might be the case when you're paying the bank charges, right? So for the bank charges, right, you are able to calculate VAT on bank charges, but then for the interest, it's a financial service, so it is an exempt supply, right? Something that you just have to keep note of during the rest of the year, right? So for the interest expense, there is no VAT because it's an exempt supply, right? But then for the bank charges, right, you would have to calculate VAT on the bank charges. Okay, so um so for your bank charges, you would have to say 18,040 multiplied by 15 over 115 to get yourself 240, right? Okay, 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 right? So they really like to play around between bank charges and interest on loan, right? But then it's something that you have to know, and they're gonna clarify it for you in your later in the years of your studies, maybe around your third year, right? Why it's that case. But then for now, you just have to know that for your bank charges, you are able to claim that inputs, but then for your interest on loan, you can't claim that because it is a financial service, and a financial service is an exempt supply, right? So on 29 Jan 2020, just haircutters returned stock that they had purchased, right? So on 18 September, right? But then the return was on 21 Jan, right? The return was on 21 Jan, and then now it was before that it purchased the goods on September 2019 from HairX. The invoice amount returned was 34,500, right? Can we all agree that when you're returning goods that were previously purchased, right, the flow of goods in this case is the goods are coming back into the business, so you can claim VAT input now, right? So your VAT input would be 34,500 multiplied by 15%. Okay, and then you can get yourself 4,500 when you say 34,000 minus 15 over 115, right? So there are things that I didn't clarify that I'm only realizing now, right? Let me just take a look at them, right? One thing, guys, that I didn't realize, and I think I didn't say this in your slides as well, right? When an amount, right, specifically states that it's an amount from an invoice, right, you have to use a tax fraction of 15 over 115, right? And when an amount, because sometimes they won't tell you that this amount excludes VAT or includes VAT, right? But when an amount that comes from an invoice, right, or they say that the company was invoiced or the company got an invoice amount off, it means that the invoice includes VAT. So your tax fraction that you would have to use is 15 over 115. But when an amount comes from a trial balance, you would have to use a tax fraction of 15%. Right. So going back to the first question, right? It says the total sales amount in the trial balance was 350,000, right? That's why you would have to say 350,000 minus 100,000 multiplied by 15%. Right. The goods that we purchased, the ingredients that we purchased on the second transaction of that were discounted to 178,250, right? They say that the amount per invoice, right, was 178,250, meaning to say in this case, your VAT fraction would have to be 15 over 115. Your municipal rates, you don't have to really know whether it was an invoice balance or trial balance, because at the end of the day, it's a zero rated supply, right? Your 18,000, it's an international travel, so you don't really have to know whether it was an invoice or not, because at the end of the day, it's also a zero rated supply. Okay. And then the bank statement, right? You know that a bank statement is some kind of an invoice, right? So the bank statement is also 15 over 115 because it's classified also as an invoice. Okay. And then now what else? The goods that were purchased, right? It clearly says here that the invoice amount was 34,500, meaning to say you would have to say 15 over 115, right? As you can see here from the calculation and the reason, that's how they did it. Okay. So that was the homework, guys, that I had compiled for you guys, just to get you guys on the same page on how to relate between your theory and your calculation, how you are able to like consolidate the information so that you can be able to put the theoretical knowledge that you would have into calculations, right? So do you guys have any questions? Did you understand everything? Do you have any questions? Okay, great. Hi, how are you?
I'm doing great, and yourself?
I'm good.
Okay, ma'am. I did understand like today's lessons and also the red questions, but I wanted you to repeat. Can you please repeat the? Remember when we were doing? Why am I forgetting? The is it the special cases where they say motor vehicles? I just need you to to explain that part of motor cars. Was it motor cars? Yeah, for the last time. Was the time when I was doing it alone, I got confused a bit, so I just want to repeat.
Okay, no problem. So what happens is that, right, in the tax legislation, it says that when a VAT vendor, right, purchases a motor car, right, or acquires entertainment, right, or pays maybe fees and subscriptions, right, they don't claim input VAT, right? So let me just give an example using maybe a motor car, and then it applies to everything, right? Everything else, even entertainment and fees and subscriptions, right? I am a vet vendor that is registered, and you are a vet vendor that is registered, right? And then I acquire or I purchase a motor car from you, right? Do you agree that the process of me purchasing the motor car, right? There is a transfer of a motor car from you to me, right? So I have to claim that inputs, right? The normal way of like VAT transactions. I am supposed to claim that input, right? But the tax ledge, right, says that when you purchase a motor car, right, you are denied the option of claiming input, right? Because the motor cars, entertainment, fees, and subscriptions, you are not allowed to claim that input on those three things, right? That is why they are called special cases, right? So, do you agree that when I purchase that car, right, later on in life, when I try to sell the same vehicle, right, I am not allowed to charge VAT because initially when I purchased the car, I didn't claim input VAT. So the same will go when I sell the car, because like now I'm selling so that the car, so now the car is going out of the business, right? So in normal cases, I would be expected to claim input VAT. But in this case, I wouldn't be able to claim input VAT. Reason being, the input VAT was denied. I wouldn't be able to claim the output VAT because the reason being the input VAT was denied, right? So the things that happen to these three transactions, whether you are the ones that buying them, whether you are the one that is buying them, or whether you are the one that is selling them, right? The reason why you're not able to claim or charge input VAT is because initially, right, from the starting point, the input VAT is denied, right? So be it you're in the position of selling the motor car or you're in the position of buying the motor car, the bottom line is that you are denied from claiming input VAT, right? Input VAT is denied. That is always your reason on those three special situations. So when an employer is giving entertainment to employees, right? Maybe he connects maybe a coffee stand in the offices, right? That is entertainment because it has nothing to do with the business, right? So now when we're doing VAT transactions for that specific business or that specific trade, right? You are not able to claim or charge VAT on the coffee stand because it is entertainment. Input VAT is denied. Does it make sense? Okay, great. So that is it for today's class. Um, I hope you understood and I hope it was very helpful. Thank you so much for joining. Please enjoy the rest of your evening. Bye.
Thank you, ma'am. Bye too.
Okay.